Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 22nd, 2018. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, what we can see here with the dollar is that we're up against our zone 2 of verified resistance, a very stiff level of resistance that the dollar has been unable to penetrate. Now, in most cases, the dollar strengthens towards the end of the month and the first week of the new month. But after a relatively hawkish Fed this past week, the dollar has made an early move. Now, when we're looking at this, our key downside pivot area is 95.04. Our predicted differences are rising with the neural index. Our RSI is not showing a lot of momentum to the upside, but we are above the 60 level. Now, point of interest here, we can see that I've incorporated the commitment of traders report into the weekly outlook, and we can assess here that large institutions are increasing dollar long positions. Now, this is a direct contradiction that I'm seeing on the gold side of things. When we look at gold, we can see that gold too is up against a massive third verified resistance zone here. But what's very interesting here under the commitment of traders is that the large institutions are also, they're not just increasing dollar longs, but they're also increasing gold longs. Now, while gold may see a little bit more upside, I don't think the position in the overall positioning of the Fed and the dollar strength is going to change. So while gold may go a little higher, ultimately it is likely to move lower. So a slight increase in net longs, but if we look at the retail traders here, the blue line, the smaller traders, they are grossly over leveraged on this one in my respectful opinion. They're putting way too many bets on the long side. Now, in order for that to work, the equity markets would have to sell off. So we do need to look closely at the equity markets because they're a very large driver of the currency and commodity markets. Right now, this week, regrettably, we've got a new verified resistance zone that is formed at 28.20. Next week, we need to retake this level very clearly. Now, the medium term predicted here is 27.97, but the critical level to get back over is 28.33. Now, if we look at this strictly based on the blue line in our long-term crossover, we can see that the long predicted is 27.87, excuse me. We're closing 27.67. This is the level that I would watch very closely. 27.8, we're just going to round this out to 27.88. We do have a very weak buy signal on VantagePoint, our medium-term trend weakening against the longer downtrend. Now, once again, when we look at the commitment of traders report here, basically, the large institutions are paring back some of their longs, but the retail traders more or less dead flat here, but they're still heavily long. So one of the other factors we would absolutely look at here is light sweet crude oil, also very highly correlated to the equity markets. Now, we can see on this particular side, both retail traders and large institutions are still quite heavily long oil. I don't think I would disagree with either side on that one. I think that oil still remains somewhat firm. We're coming into a very strong verified support zone here, utilizing this newest indicator that I've worked on collaboratively with VantagePoint to develop. So it helps traders see these very powerful zones that even though we may have a crossover and everything's pointing down, these zones, the market can hit these zones like a brick wall and turn around and reverse. So we always have to be mindful of that. But for next week, once again, using that long-term predicted moving average only, the blue line, our pivot is 70.68. We're closing 69.28. We need to get back up above 70.68 and stay above that particular area. Now, as we come into our main Forex pairs, the euro is certainly going to have an interesting week ahead. problems again in Italy. We've got Brexit. There's a whole bunch of things going on here. But what I will point out is that the market came into this verified zone, and what appeared to be a very easy short sell actually turned into a violent reversal on Friday as we come back up to this critical vantage point resistance area. That area is between 115.21 and 115.48. Now, what I find interesting about this particular level is, again, right now we're trapped in between these levels, between basically 113.30 and approximately the 116.30 area, but we're smack dead in the middle of this range here, guys, between verified resistance up here and verified support down in this level. So the first test on this on Friday saw the buyers step right back in and start pushing this back up. Now the signals are mixed here, but I think for now the euro should stabilize at least until the latter part of next week. Now, one of the counterpart to the euro-US pair, of course, is the US Swiss franc. Now, US Swiss franc, this is very much a gold trade here, guys, or in the alternative, an equity trade. So if the equities go lower, gold goes higher. Basically, if the equities go higher, that could support US Swiss franc, but we need to hold above 98.69. And again, a much better pivot area here. The long predicted 99.27, we're closing 99.60. It's relatively bullish while above the 98.60 mark. But once again here, guys, it's a very mixed signal, and this pair is absolutely dependent. If it's going to move lower, that means gold is going to move higher. Equities would be moving lower. So a mixed signal on this one right now, but we've got this verified resistance zone up to 1.0065, excuse me. Shorts clearly the favored play here while we're below this level. Now you can see we've had multiple failures just above this parity line. When we go back to 6 months here, basically over the last 6 months, US Swiss franc has simply not been able to break this level. So to say that this is a tough nut to crack would be an understatement. Now, if we look at the pound dollar going into next week, a very similar situation. Brexit continues to hold over this pair like a guillotine. So once Brexit's resolved, we get a deal. Great Britain US should move up significantly, but that's probably not going to be back until November, December, or maybe even not until January, February, March of next year. So right now we've got verified zones here. If we back this out over a 6-month period, we can see this crystal clear going up into this 133.80 area, approximately 133.65, and it's just not breaking. And you can see we're getting a series of lower highs, but we're not getting a lot of lower lows either. So it's stabilizing between 133.65 and the lower end of this zone at 26.85. But in my respectful opinion, 129.40, that's the downside support, followed by the start of the third zone or the end of the second zone, which would be about 128.80, and I would anticipate that particular level to hold. Now, currently right now, our medium-term predicted difference, our neural index is down, but once again, guys, we want to make sure we're looking at the medium and the long-term crossover, but we can feel free to remove the black line and just use the blue line by itself. The blue line is updated with the long predicted moving average every day, 130.97. We are closing below that. We've closed it below it 2 days in a row, 3 days in a row actually. So I would suggest that we likely are moving lower, but any good news out of the Brexit front and this pair turns around. Now with the dollar yen coming into next week, 100% dependent on the equity, on the stock, the S&P 500 and the Nikkei moving higher. If those two major indexes don't move higher, dollar yen will move lower. Now 112.62, the key vantage point pivot area, just happens to intersect with the yearly opening price. This is something I've worked on in the Tampa seminars, the mastermind program, my own direct clients. The yearly opening price is a massive resistance zone here, and you can see now the vantage point level is matching that. Now The medium term crossing the long predicted. We still have some good activity on the RSI. Remember, the RSI is a momentum indicator. It is not an indicator that is based off of an overbought or oversold condition. So right now, the angle or the slope of the RSI is still pointing higher, suggesting we've still got a little bit of momentum left here. But again, we need to break above 112.62. Now, once again, if we bring our long predicted in here, that area is coming in at 112.43. We did close 112.50, so it still carries a slight bullish tone. But if gold breaks out to the upside, dollar yen will move lower. If the equity markets crash lower and we can't retake the levels that I discussed, then this pair also again moves lower. So keep that in mind. So again, what I always recommend is that we limit our trade on Monday. Monday is a fake trading day, in my respectful opinion. We want to let the market get its footing, and then we can get a feel for which direction we go from there. So this area of resistance, 112.43, 112.62, is significant. If we can break free and clear of that, we should be able to move back to 114.65. However, if the level discussed holds, then we are very, very likely heading back into that 110 area. Now, US CAD going into next week. US CAD is what the Canadian dollar needs for strength. This coming Wednesday, I believe it is, we have the Bank of Canada announcement. They are likely going to hike. Not a big deal about the hike, but we need a statement that is ultra bullish from the Canadian equivalent of the FOMC. So when the Bank of Canada talks, we need to be listening to what their future plans are. What are their fears? What do they like? What they don't like? What do they think of the latest North American Free Trade Agreement? A lot of things on the table, but suspiciously, the Canadian dollar is significantly weakening ahead of this announcement, suggesting that maybe somebody's already leaked the information and that Bank of Canada is not going to be hawkish, it's going to be dovish. Right now, however, we are moving into a verified resistance zone. Shorts clearly carry the slight edge while below 133.65, so we've got to watch that area very closely. We are moving into an overbought condition here, but again, the RSI was never intended by definition to be an indicator that shows overbought or oversold. It's designed to show us momentum. Right now, there is some slight momentum to the upside, but I believe it will stall between 132.30 and 133.80, and that will be potentially a very, very good short area. So we can ride the longs up to that area. But again, this pair is going to be very choppy this week and also dependent on crude oil moving higher and stocks moving higher. If that doesn't happen, then this pair continues to rise. Okay, so as long as we understand that. Now, as we look at the Aussie-US going into next week, we've completely stalled out on this verified resistance zone here. Basically, strong resistance on the Aussie between 70, basically about 71.70, all the way up to 73.80, a very strong verified resistance zone. Indicators already starting to roll over to the downside. We must break free and clear of 71.29. The week we closed at 71.15. Once again, taking your long-term crossover and using the blue line only, 71.10. So we still managed to close slightly above that level. But Aussie is dependent also. If gold moves lower, Aussie moves lower also. New Zealand, basically the same trade here, guys. I've heard this so many times that people are saying, well, I'm long Aussie US and I'm short New Zealand US. We just don't do things like that, guys. It's basically the same trade 85 to 90% of the time. So while New Zealand may look slightly more bullish, ultimately, it's stalling here too. We've got a clumped up resistance zone all sitting up here around right around the 66.10 mark. We're closing 65.87. If we can break free and clear of this zone and stay above that by midday Tuesday, then New Zealand US goes higher, Aussie US goes higher. But if we can't get above this and stay above this by mid to late day Tuesday, then this pair is going lower. So Not a lot on the docket next week on the US side. We've got the US GDP, I believe, next Friday. I expect that to be a blowout number, a very good number. The US economy very hot. And our other event risk, of course, is that Bank of Canada. So with that said, this is the Forex Weekly Outlook for the week of October the 22nd, 2018.